Hello everyone, welcome to my tech YouTube channel Yasumi. So today I'm going to bring you how we call, he's an all-rounder. He has been wearing different hats, working for different platforms. He's a professor, speaker, investor, capital market investor, startup mentor, a real estate holder, partner in global partnerships and networks. So he'll be give his Taurimas and he'll be joining today's discussion for something insightful. I know I'm going to have him for several discussions in my future series as well. So the specialty is he is working with 6 continents at the time and has experience in 26 sectors across different fields, different regions. Okay, so how are you doing?
I'm okay. How are you?
I'm also doing good. So I went through your profile, so I saw that 26 plus experiences in different areas, different places you are having. So as a start of this, so I have to tell you that I am doing some vlogs with the global leads on AI, leadership, management, some technological touching some technological fields. HR, I'm trying to take the investors, change makers, that kind of global leads I'm having. So that's why after seeing your profile, thought of inviting you. And thank you very much for accepting my invitation, like with a quick message and all. You told that okay, you are free this time. So as a start, can you tell about yourself and about your background? Like I can see we are wearing a lot of hats, and also like in 6 continents you have your work, you have spread your work and all. So yeah.
Well, maybe let me explain, what I'm doing now, what kind of positions I'm holding at the moment, and maybe later, we can, go back, to particular, experiences. So, like at the moment, and let's call like one of the executives, the CBO, and one of the board members and founder, co-founder of one of the financial institutions here in Lithuania, in the Baltics, which is European Union. Some people don't know where Lithuania is. So like it's European Union, it's NATO country, it's OECD country, and we as a financial institution, we're under the supervision of the European Central Bank. So it's completely a European jurisdiction, and we're running this financial institution. It's quite, let's say, classic, institution. We're collecting deposits and issuing credits. Now we're getting closer to more around 75 million euro of portfolio of assets under management. As I said, mainly it consists of deposits and other long-term assets. So also what I do for the past 15 years plus, I'm in capital markets. I've been working with overall institutional investors, starting from pension funds, hedge funds, overall collective investment schemes, then ending, with private equity funds, real estate funds, venture capital funds, and other high net worth individuals. So also, I'm the vice president of Vilnius Chamber of Commerce, where we're representing around 600 companies. And I'm also vice president of Turkish Lithuanian Chamber of Commerce. That allows me to be involved in multiple international ventures. I'm quite proactive in GCC area with all these countries like United Arab Emirates, Saudi Arabia, Oman. I have a lot of expertise working with different co-investors So like as you said, they are like in all continents mainly, like so because nowadays capital markets are so global, there's so much interaction between them, and usually like you have a good reputation, if you have good investor relations, so you can involve these international actors into your ventures quite easily, because now there's no more or less borders for the flow of capital. And yeah, so basically that is it. I started my career when I was still at university. I started with some, let's say, business advisory experiences, that I was a part of the big four teams, and multiple projects. I had a chance to work with different institutional investors. So yeah, that's mainly a few facts about me. We can go back to them if it's related with your questions.
Yeah, so thank you very much. So yeah, I guess like we can speak about your things and your work like hours and hours, like that kind of work experience I saw in your profile.
Yeah.
So yeah, so can you like walk us through your journey or the key milestones on your career and your path now you are playing? So, what made you to choose this path as well as what kind of key milestones you had on your way?
Uh, well, actually, like when you're a young, student, when you just enter university, you have like, quite limited understanding, what's gonna happen like after you graduate from universities, and what's gonna be like what kind of opportunities you will have, like when you're ready. And like most of the students, I had a vision maybe to become like a diplomat, maybe to just to have some different job positions in multiple institutions. But I had some let's say crucial experiences when I first time went to United States. That was like when I was 19 years old. I was still after finish my second year of studies at university. I understood that it's very easy, to if you have energy, it's very easy, to earn some, let's say, salary based income. But then, in that case, you depend on different, um, let's say, circumstances that you cannot bias. So it means that if you want to, let's say, monetize your energy, your passion, your know-how in the most efficient way. So like perhaps it's the best path is to become an entrepreneur. And that's why after I finished my third year of studies at university, I decided to launch my company with my best friends. And since we didn't have enough capital in order to do some kind of industrial activities, so we started with business advisory. And we had a period when our country, Lithuania, was about to enter European Union. So we started with grant writing business. At that time, we didn't have so much, competition in that area. So that was quite successful. And later, we developed, these activities into more sophisticated, let's say, ways and scenarios when we started being like we became more related with capital markets. As I said, I started working for multiple international companies and projects. So like it all expanded into like more sophisticated and licensed financial market based activities. So that was the beginning. And I don't know, something, everything went organically, based on like my existing, activities. I started gaining new competencies, new degrees. For example, when I got involved more with the, let's say, insolvency, bankers administrating, activities, I had a chance to run as executive director of one association. I had a chance to become more involved in bankers administrating procedures in legal restructuring. So more based on that, I gained my legal degree. I became a master in law. Then the more I got involved with startup development activities, I decided, to gain another master degree in. So that's how I became a master in business administration. So everything went in parallel, my personal life as well. So like everything, I just used all these chances that I had in my life and tried to monetize my experiences and the right timing. Sometimes it's always about the right timing, and here I am now. So
Yeah. So
I
if
guess,
yeah.
yeah. Sorry.
Sorry. If I ask, what's your favorite role out of the roles you are playing now and from the beginning?
Sorry.
What's your favorite role since you are wearing different hats and playing different roles?
My favorite what
Yeah, I mean job
job?
role. Yeah.
Oh, I don't know. It's depends. I wouldn't say like what's my favorite position. I guess each period in my life had their own favorites. So from each experience, I gained a lot. For example, I haven't mentioned yet that there was a period in my life when I started writing my PhD thesis in public financial management area, and that's how I got a chance to deal more with academia area, like with both students and then other colleagues. So by that time, I had a chance to be international, let's say, speaker, visiting professor in more than 10 European universities, including London, Paris, Luxembourg, three American universities, including Stanford University and Silicon Valley. So all this allowed me to become like very wide, let's say, professional, and I had a chance to combine, my theoretical activities, my notices, and practical aspects. I think that allowed me to stay as competitive as possible because I couldn't because of my academia positions. I was forced to update my knowledge all the time, and that was allowing me to remain in a good shape in terms of like know-how. I think this lifelong learning approach allowed me to not to stop, like not to become some like just very old fashioned or like retired and like in fact, instead of like yeah. So that would be maybe this part of my career would be also quite interesting, because usually like when you start your business you don't have time for other works, and this.
Yes, you told that you started a startup as well with your friends. So, what kind of challenges you came across, and how did you overcome those?
Yeah, I mean, when we started, let's say, innovation, some kind of niche things, we started with quite classic, activities, because grant writing wasn't something about like being innovative or something. But in general, one of the success parameters was that there was not enough supply for such services. There was a huge demand, and our clients were like a bit too lazy, to do it themselves. And what we just needed to do was just to read the guidelines for the applicants. Each call for proposal had different guidelines, and what we did, we just had enough courage, enough confidence to help with that. And I would say that was the perfect timing for that, because nowadays market leaders in that area, they work differently. There's a completely different pricing system. So in our case, we were quite lucky, and we were on the right time. So again, I would highlight this proper timing, for our services, and yeah, that was basically it. I wouldn't name some extra aspects regarding that.
Okay, so what key indicators you consider when you advise clients, or when you are making the uh, investments or the investment decisions? Uh, this is like regarding the capital markets actually.
what do I do? Like,
What kind of
sorry,
key?
could you
Yeah.
please
What?
clarify the question? I
Yeah,
didn't
yeah,
get
yeah.
it. Sorry.
So, since you are investing in capital markets as well, I think you're prominent in that. So, what kind of
Yeah.
key indicators you will advise the clients to consider? Or what kind of key indicators you will consider when you are making the decisions while doing the investment?
Okay. Yeah. I got it. Yeah. Thank you. Sorry. Like, sometimes I want to be, precise and like, perception of the question. So that's why. Okay. Got it. Actually, it's very, very like, that would be a very wide answer because I had a chance, to work in multiple, layers that, I could answer it very differently, because I started my career when I was a part of like, licensed asset management companies and portfolio management where we were running like, huge funds by trust. So it means that we didn't, invest our own, money. We were using some other investors' money and making those investment decisions for them based on some like agreements, based on like policies that we, let's say, agreed with, them before they allowed us to do it, on behalf of them. So in that case, we were just first of all identifying the risk appetite on behalf of them. So we were asking how much you want to get, and based on that, we were doing, the investment decisions based on different asset classes. So obviously, the most, let's say, risky investments, but the ones that generate, the highest returns of the investment is like so mainly like it's all the time. First of all, you need to identify the level of the risk appetite. After you do it, like what kind of asset classes you could just into what kind of asset classes you can allocate particular investments. And then it depends like on different cycles of economy. For example, we know like when there's a bear market, and then in bear market, you can be more, let's say, a risk taker. You just need to clarify, what's your appetite for investment, for risk, and then it's easier to make those decisions. Also, of course, it's always about diversification. I don't want to be banal, but it's always that you cannot put all of your eggs into one nest. You to diversify into different geographical areas, into different asset classes, into different levels of particular asset classes, and that's how you manage this by based on the diversification. And the third parameter is never in capital markets, reputation is number one. And if you're allocating particular investments, it's always about like respect, like trust and reliable partners that you're dealing with. And there are a lot of measures what you can take in terms of like managing this reputation risk. And then if you're dealing with all three parameters, then you might be very successful, of course.
Yeah. Oh, thank you very much for that explanation. And I can see your expertise varies like from AI, blockchain, capital market, metaverse, and so on. So, how do you see these innovations will affect the future of financial markets and the capital finance and the capital markets? I would say.
Oh yeah, of course. I wouldn't say it will affect. I would say it's already affecting. Because if we speak about like professional asset management, we're all using different AI tools. That there are two ways of doing like financial analysis. I have this fundamental analysis where you're trying to involve multiple fundamental analysis, macroeconomics, elements and everything like that, and also technical financial analysis, when you're like trying to analyze the past data. So like for the second one, it's all about like most contemporary technologies, including AI, that I use, at the moment, all the time. And as I'm trying to highlight, since we have like different international global crises, the intensity is becoming, higher and higher, and because of this fact, we have the spread, much smaller between, those global financial crises, just because, we're getting, smarter. We can, analyze this past data, more efficiently, and based on that, we can, apply the most innovative solutions. And coming back to your question regarding, metaverse, regarding, let's say, all these AI solutions, obviously, now we are, after COVID, we have entered into a completely new era, new level. And obviously, before COVID, we were not used to such kind of meetings like the one that we are now, online. Obviously, we were using, all these face-to-face meetings, and the world was much bigger, and some people who wanted to have international conversations, cooperation, they were used to travel a lot. After COVID, there's no need for that. We have more and more tools in order to stay at home, and have a lot of room, for expressing ourselves, for being, using our knowledge by not even leaving the house, and then that allows us as well, to use, different kind of innovations in professional asset management as well. So I believe that, there's no question that, the world has changed, and the more and more we will use different video, like virtual reality solutions, and then the metaverse that, sound like some kind of science fiction, or some kind of future thing, is already now there, and it's just a matter of like how the habits of the people will be changed, and in the way that we're gonna have this as more and more common thing, in the future. And obviously, the AI will replace multiple positions, in the future. And I believe that humanity will get back to its core, where, the creativity will be more, valuable, and where we will be like more motivated to use our more, let's say, innovations, more art, elements, more what I call creator spirit than we used to have, like when we were more, forced to have this positions, working from five, like from 8 to 5, and then having 5 days, 6 days per week, of working, and we will be less, let's say, caged in some kind of, let's say, vertical positions, and we will have more and more opportunities to express ourselves in this, let's say, virtual reality, which will become more and more common, nowadays.
Yeah, so since you are working in different continents and different regions, so what kind of geographical tensions and economic, what we call economic impact you see in different when you are working with the different regions, which is already affecting this capital market and all?
Of course, now the globe, like nowadays, world is in a big, crisis at the moment, because what we see, what's happening in Europe, on the 21st century, it's not ridiculous. It's just very sad, and instead of, we would have some, commercial relations, doing some business investments to both sides. Now, some, like, one country is just, made a war in another country, and then instead of, like, commercial activities, they're like, killing each other. We see that, sovereign country was attacked by its neighbor, and the babies are dying, women are being raped and the hospitals are being attacked, and we're not speaking about some, I know, savage, societies. We're speaking about like things that are happening in the middle of Europe. And like, instead of like the economic growth, we are forced to allocate a lot of things into a defense, system that we didn't have like perhaps for the past 70 years after the Second World War. And instead of like allocating our money into innovations, into universities, into knowledge, into some kind of again added value things, we go back to military, sector, which is booming now, and then instead of like spending money to books and knowledge, we're spending money to bullets and bombs and all these horrible things that they're pushing the humanity almost like to the edge. And we're always speaking like, remember, like 3 or 5 years ago, nobody was speaking about nuclear war, right? Now for us, nuclear war became a new norm. We're not that sensitive anymore when someone's telling like, look, they started some actions over the nuclear power plant or something. Now for us, it's like, okay, here's another day with another nuclear threat, for the humanity. So like even ourselves, we have changed, based on this unhuman things. And then, plus we kind of, what kind of horrible things, started, happen in the Middle East and in Israel and their conflict with Palestine. I mean, like all these conflicts, and like in Africa, there's a huge tension, like uh, in China and like there's so many conflicts where we could expect easily to you know uh, to get worse and to become a global, like it's already global, but it could be like, global threat for the entire society. Imagine like if we start the real nuclear war. And then, as Albert Einstein has said, he said that I'm not sure what kind of weapons will be used during the Fourth World War. No, during the Third World War, but during the Fourth World War, they will use sticks. So, like, it means that perhaps we can destroy our civilization just because of some stupid decisions that are made now, and which is actually stopping us from the progress as a society. Instead of, as I said, doing some kind of prosperity oriented activities, now we're trying to allocate as much as is possible to our defense, and instead of producing some kind of pharmaceutical innovations, cancer curing solutions, now we started creating drones in order to kill as much as is possible. So I mean, it's very sad what's happening now, and it's quite demotivating. A lot of societies is becoming more and more challenging to attract capital for some of the regions. Even our region is facing a lot of challenges because we're in the border with the aggressor. So it's quite hard to persuade investors to invest into our countries, because investors, they are pragmatic people, and they, instead of allocating their money into our regions, they would prefer to invest somewhere like maybe South America, where it's more like stability, more, I mean, less tension in terms of like military action. So I would say like now we're facing a huge issues as a humanity, as a society, and we must admit that there's no guarantee that it's gonna end very soon. And there's a huge threat that we might lose everything that we built in the past 5,000 years.
Yeah. So yeah, when you talk about the war scenes, I mean, from Sri Lanka, we also had to face a war, like we had around 30 plus years. Different areas we were facing, that's why I can understand the situation there. Now in the places there, the war begins, so I don't like these war things happening. So what? Now this we are going with the technology, and technology is like day by day we are coming up with new things, so it develops like and rises in many ways. So what kind of challenges do traditional financial institutions face in this tech-driven era?
Well, it depends which investor, because we have like short-term investors, let's call it like the ones that are investing like into very, very like short periods. So mostly these are like, well, of course, exit could be, like in multiple scenarios, quite soon. But I mean, they're like, let's say, big risk takers, mid risk takers, and like small risk takers. Okay, so like the small risk will be taken by long-term investors. The medium risk might so-called medium, like let's call it like up to the ones that are investing up to 35%, let's say, of the annual return of the investment. So they might be called as like mid-term investors and short-term investors. That's called them like VCs or like business angels. So like they all have different strategies and different obstacles to overcome. So obviously the first one, let's say if we speak about venture capital funds and business angels, obviously we could see that the bubble was a bit damaged. I mean, there's no so much let's say hype and enthusiasm about startups. Doesn't matter which area it is. Now we have a big hype, still big hype about like robotics, about AI, but still like what we noticed is it's quite challenging, to persuade VCs and business angels, nowadays to believe that a particular startup is like changing, some people's habits or it's solving particular problems and the way that that would be capable to achieve the unicorn level. If we speak about market, let's say players like venture capital, like private equity funds, they're also facing particular problems that would be, for example, uh, related with geopolitical issues at the moment. Also, we had a huge inflation rate for the past 2 years that was historical, and then I mean it stopped multiple long-term decisions because there was a uncertain situation in most of the markets. The central bank started increasing the like percentages for loans. So like I mean, we had a lot of macro issues, and then we're still having. Based on that, the central banks, they haven't stopped, particular measures that were taken, like let's say like a year ago, and there's still uncertain situation. And if we speak about long-term investors, the one basically that are having the core goal is just to beat the inflation rate. They cannot relax because the problems in the mid and short term haven't been solved yet. And then there's still no enough uh, clarity, and then stability, like in multiple sectors, and then let's say in the bigger part of the world. So all this, uncertain situation doesn't allow the capital markets to relax. And the recent situation in the capital markets, what we had, shows that most of the measures that were taken by some of the regulators, some of the, let's say, public sector institutions, they didn't pay back, and that's why there was a big drop in most of the asset classes recently. And it shows that there's no one way to solve it, and the time will show what's the proper reaction regarding dealing with these kind of issues.
Understood. So yeah, so there are a lot of development coming up, but also there's a lot of risk. We have to have the plans for the mitigating risk. So to overcome the challenges, where we have to face those things. Uh, I don't know, like as you told, like with the technology, we can all the build up things might be vanishing like in seconds also. So since you talked about this central bank things, I would like to know about how do the capital markets in Europe differ from other regions in regard to these regulations and the terms of structures and the investors' behavior.
Well, actually, I don't know. There could be like a lot of explanations and opinions about it, but what I've noticed, like in global capital markets, is that initial pioneer, initial star that we should follow, in capital markets is obviously United States capital markets side, and usually if something's happening there, it could be like in multiple like asset classes based on the cycles that we have in economy. In around one quarter, we're going to have similar situation in Europe, and then maybe like more to the east, the same waves will go there as well. So obviously, the first bird, is always there. And if we have some, let's say, tensions in particular sectors, we know that some of the sectors there are like indicating, potential long-term and short-term crises. For example, transportation sector, right? So if we see like something's going on, in the United States in around one quarter, similar mood, similar things might happen or might be caused in Europe as well. So we cannot avoid this trend of cycles, and it's always about monitoring what's happening in the U.S. Markets, and then that allows us to see what might happen in Europe as well. Obviously, we have different regulators, but mainly like there's a big cooperation between them. And when we have there's these measures that are taken in order to beat the inflation rate, like this, that like these, you know, macroeconomic, measures that were taken, and all these packages, they seem to be quite similar. And there's obviously a big cooperation between the regulators, and because all these economies are quite biased. They have a long-term cooperation, track record. So like they cannot be another way. And obviously, our money markets, our systems are very very like connected. So like that's why we have another trend, of decentralization, in different areas. So that's the reason why multiple blockchain solutions, multiple crypto initiatives, they're becoming more and more popular because now uh, different societies, they want to become less dependent on some kind of actors that they cannot bias directly. For example, we know that there are some such kind of phenomena as BRICS countries, like the ones that they don't have so much power, and let's say the dominating world part, but in terms of population, they have like two-thirds of the or even more population of the earth. So that allows them to have more confidence in order to take more initiatives in order to decentralize the existing system. So in the future we will have more and more such kind of initiatives, and I believe that same let's say values such as free economy principles such as you can't just judge the winner, or the winner will be the ones that is the strongest one. So like so that's the future anyway. So yeah, so that would be my comment about it.
Okay, so since we you raised the central bank thing, so what kind of an impact the central bank policies have on capital markets, and how should investors adjust their strategies in response to these policies? Sorry.
Uh, Sorry, Could you please clarify the question? Because it's a bit related with the first one, so I would just to see the difference.
Okay. So I just want to ask, like, since central bank has policies, what kind of
Yeah.
an impact these policies have on capital markets, and based on that, how can the investors adjust their strategies?
So of course, there are many ways. How can we bias capital markets and different limitations, restrictions. Uh, it's it could be taken as a measure, and but obviously when we speak about regulators, as central banks and or related institutions in different jurisdictions, they don't you know they don't have any intention just to do some actions for no reason. Sometimes usually like they are taking particular actions in order to achieve particular goals, and mainly it's about like stabilizing the system. And if we have bull market, they want to chill the market. If there's a too big bear market, they want to accelerate it. So there are like multiple ways how can it be affected. So for example, if we have this high inflation rate, obviously if we increase the percentages for mortgages, that might infect the supply of credits, right? Because if it's becoming too expensive, there's less interest in taking more credits. Obviously, if there are like there's too little action, if the market is too slow, if we have bear markets, so the regulators might decrease, the rates, for credits, and like the percentages, and that's how they can initiate particular changes. So there's one way. Sometimes, for example, when there's a risk that we're entering, some, let's say, too risky, consumption, for example, cycle, there could be such measures taken as, let's say, limitations regarding particular sectors. For example, the central bank, could have restrictions for real estate, credits, for example. And instead of like issuing those classic credits for real estate projects, the financial institutions, they need to show more attention, for particular industries rather than issuing credits for real estate, clients. So there are multiple ways how this regulators, they can bias capital markets or particular sectors, but again, it depends on the reasons why they're doing that. So there are particular measures that could be taken in order to initiate, the activities. There are some other measures that are usually taken, in order to limit or to slow down the market. So it depends on a cycle of economy.
Okay. Thank you very much. So, Taurimas, I don't know I am pronouncing your name correctly, so that's I just want to skip. So, what?
It's very
It's the first time I heard. I don't.
Yeah, thank you. All good, no problem.
Okay. So, since we are coming to the end of the session as well, what kind of, with the dynamic career you are having, what drives you to keep pushing boundaries, and what legacy do you hope to leave in the world of finance and investments?
You mean like what's my expectation for the future?
Your expectation for the future and how you are going to serve the country or the world with your expertise?
I don't know. Like it's very like maybe that would be too brave, to say that I could affect some of the big results. But yeah, it's gonna be. I would say that it's very hard to predict what's gonna happen, like in coming like 2 3 years, because there is such a strong uh, phenomena that are happening in geopolitical area at the moment, that stops us being confident about like any kind of presumptions regarding the future, because there are a lot of let's say conspiracy theories that I am not a big fan of, but usually like they're based on some crucial trends. And for example, obviously what we face now in let's say global geofinance, let's call it that way. Let's not call it like geopolitics or geoeconomy, but we have like such a phenomenon as geofinance. So obviously our main running power is facing big challenges. And for example, there's a big uncertain situation what's going to happen in the United States, like after the new president elections by the end of the year. And there might be some answers after them, for example. And then based on these, let's say core let's say outcomes, we can project the future and our role there as well, for example. And also as I said, there's a big uncertain situation regarding Russian war in Ukraine, right? And before we solve this problem, it's very hard, to predict, or to um, have any, positive approach regarding, particular trends, in all entire neighboring, region. So there are so many variables that we need to eliminate, in coming, let's say, 12 or even 24 months. That without it, it's very hard, to project, any kind of trends, So that's what it is.
Yeah, thank you very much so for the valuable insights you're giving. Uh, I just want to know, as one final question, what kind of key takeaways or insights you would like to give to the juniors like us, especially like those who are trying to invest on capital markets or trying to do some start startups. Yeah, some career advice.
So first of all, we should understand that economy goes in cycles all the time, and we should never forget that. Even though there's uncertain situation in the markets and in geopolitics and geofinance, but we should understand that when we have like some like big curve of going up, we will have going down. So we should understand that it's not the end of the world. We might have a huge insolvency, issues with particular companies or even sectors, but then even it sounds banal, but the darkest night is before the dawn. So there's going to be always rise of the economy. And if we have now like high interest rates, initiated by the central bank, there will be a drop of if interest rate, right? So it's always about being very very precisely ready, but also patient. And the most successful businesses are the ones that are that emerge in proper timing, and they know that they will be successful in changing people's habits, as most of the unicorn co-founders admit. And so that my suggestion is just never forget about this, and never forget about there are cycles in economy. And also it's always about using the advantage of the globalization advantages. I think despite the fact that there are a lot of trends of decentralization let's say, measures and trends. But on the other hand, the world is becoming smaller because of the globalization. Most of the consumers, they're facing the same needs, and there's a huge potential in creating big international global businesses, in especially in internet era, in Web3, Web4 area. And the most successful businesses will be the ones that are understanding that this is the trend, this is the target for them to achieve, and everyone should be projecting their activities in that direction.
Thank you very much for all the insights you gave. So I was like, at the beginning, I was like thinking, okay, you have expertised in different areas, different areas like capital markets, real estate, technology, partnerships, global partnerships, and like so on. So I was thinking what to focus on. So since we could drive the conversation into this finance and capital markets, I thought, okay, so we can talk about that today, and maybe on a later day we can touch one of the other topics later. So yeah, thank you very much for giving your time for me. It's like I'm very lucky to connect with the person like you through LinkedIn. And yeah, thank you very much.
Thank you for interesting questions. It was my pleasure to be part of your I'd say interview, and let's stay in touch.
Yeah, thank you. Have a nice day then. Have a nice day. Bye.
Thank you. You too. Take care. Bye.
Take care. Bye bye. So, if you find this discussion valuable, insightful, just subscribe and stay tuned for more discussions like this. Bye bye.